Welcome to the Trading Pit, your virtual gathering for premier traders. Man, got an exciting show today. We started the morning with Bitcoin pumping up near $43,612, and Ethereum's back above 2,200. Man, these weeks are wild. And I'm left wondering, is it consolidation? I can't even say it. I'm so excited. Is it going to come to a close this week? Where's the next trade? These are all things I'm asking. I'm your host, Marconi White, and today I'm joined by two of my favorite analysts, JJ and Ben Lilly. Gentlemen, so glad to have you here. And JJ, as we do, we're going to start off with the first question for you, which is, what is the mood of the market?
The bulls are back, baby. Nice pump this morning. A lot of excitement in the market, a lot to get to today.
Bulls are back, man. Listen to the excitement in your voice. I love it. All right, unpack that. What do you mean? What are we seeing in the market that says the bulls are back and they're in charge?
So obviously last week, like we were saying, the market needed some consolidation after that large wick 2 weeks ago up to 45,000 or so. Then we had that move back down and we really solidified that 40K as support, it seems. We took in some short interest and now we see kind of an interest in buying to the upside return into the end of the year here. Driven this morning, we saw a return to spot volume, as you see here on this chart. So we see this line coming up, and this is really what drove us over 43,000. Then we see this nice surge in open interest as well that was following the spot volume, just adding kind of a nice juice to the upside there that's given us this candle. We are encroaching on resistance. There's a lot to get to today, a lot of nuance in this current market setup. So as well as open interest, and things are looking up, but there are some caveats to be aware of ahead into the end of the week.
Okay, so let's just unpack that spot volume a little bit more. Last couple of weeks we've talked about the fact we were expecting consolidation. You had talked last week about at least into this Friday. Ben Amin, who was our guest last time, talked about probably to the end of the year, unless the traders, the TradFi guys wanted to steal Christmas and be the Grinch. So when we're looking at that volume, I mean, just in terms of the amount of volume that we're seeing from a spot perspective, does it look really that strong? Is it anything that could be a fake out?
It could be, right? So what we were saying last week is that the market needs to consolidate because we saw a lot of people rushing in to sell the upside on calls. So what they were doing is they were selling short-dated calls that are expiring this Friday. So that's kind of why I pinpointed this week as another week of consolidation below the breakout of 2 weeks ago, is because we see here this 44,000K strike was sold. So that means that if price were to go above here, the option sellers would lose money. So we had a good idea that they were going to keep it pinned. This is something we saw in the derivative order books as well, an options exchange.
I want to hit that point because as the bell closed on Friday, I thought of you because you said, "Hey, I think we're gonna get right around that 42K," and I'm pretty sure that's where we closed on Friday. Am I right?
Yeah, it's options.
It's options, baby.
When the market's kind of dry as it was, like there wasn't a whole lot of it was just chopping back and forth, right? So we were showing kind of the consistent liquidations that were happening on both sides. Anytime people were getting over leveraged long, it was wiping out and returning to that range low around 40.5 or so, 41. And then anytime it was getting to the highs, we were seeing it wick back down. So even after the FOMC, that was way more dovish than the market seemed to expect. We got that kind of fake breakout and we returned right back to the range lows, just taking all that liquidity, soaking it out. And it seemed like they were trying to entice some short interest, which finally came in towards the end of Sunday. We saw a large put buyer of December 29th, 38K puts. So they bought about 1,000 of these. Let me find it. There are 1,000 puts bought. Right now there's 3,182 open for the end of the year. So these expire in next Friday. And if price were to go below 38K, these would turn into in the money. So it seemed like that was somebody profit taking. They didn't want, maybe they had, say, 1,000 BTC of exposure or somewhere in the neighborhood. They didn't want to sell it in case we get this move to the upside into the end of the year. So what do? You buy puts that kind of puts your stop loss in place for the next week or so. And then if they expire worthless, you ultimately get an extra tax write-off for that while keeping your upside exposure. So it didn't seem to be a directional short bet to me. And then what happens, the mechanism for this, somebody sold these puts. The way they hedge that is they have to open short contracts to hedge it. And that kind of gives us the extra juice that we needed to squeeze back up to this upper end of the range.
So, okay, let's just kind of summarize where we're at now. We're seeing this pump this morning. We see some good spot volume. I think you already touched on, and maybe we want to revisit sort of the perps are looking like we're seeing some additional move to the upside. The bulls are in charge. And then from an options perspective, it seems like someone's hedging their bets, right? Maybe they haven't sold the BTC into the market. They're buying some puts in case we get that push above. So they're kind of on the fence. They don't want to try and guess what the market's going to do. They're kind of ready for whether or not we see perhaps this is a fake out and we head below 40, or if we actually move above this 44K area where we've been consolidating for a couple of weeks, they're ready for that as well.
Indeed. Yeah. So like we were saying, the past couple of weeks, there was a lot of selling of, say, the 44 to 45K strikes or so, anywhere in this range, 44 to 48 that are expiring this Friday. So 2 weeks ago, these were commanding a high premium. Like you might have been able to sell this 48K strike for over $1,000 2 weeks ago when we had that huge breakout to 45K. So they collected that upside, and we actually see this in the derivative order books. So we saw this large move up, and then all of a sudden these sell walls started appearing. So these are the people that sold those calls, and this is how they protect it. They put these large sell orders in place to prevent price from getting above here, right? Because if price is trading below it, you see this large sell wall. Nobody wants to buy into this for numerous reasons, so it suppresses price. But now we see it removed. So you see how this red dropped off. What day was this? Dropped off about 3 days ago or so. And what we saw at the same time was 45K calls opening for the end of the year. So all of a sudden, these strikes started opening. There's now 6,175 contracts of open interest at 45K. I think a lot of these are longs, and that's because they're now hedged for this expiration that's coming up tonight into tomorrow.
Okay.
Or I'm sorry, Thursday into Friday here. So now if price goes up, they're hedged with those contracts expiring next week against the calls that they sold tomorrow. So price basically has this open window here to accelerate, but obviously that's dependent on TradFi playing along during the New York session these next couple of days here.
Yeah, which should be opening just in the next 6 minutes or so. Ben, you're kind of sitting on the sidelines. I'm expecting you to jump in here, and I want to hear, do you have the same opinion? Are the bulls in charge?
First of all, excited to be here. And second of all, even more excited to see JJ just pumped for the action this morning. You can hear in his voice, he's really excited. But I think one of the nuances that he's getting at is just really important to understand, which, we had a lot of volume driven on spot. And it's almost mechanical in the way that it's playing out here in the options market. You have the hedging on the order books on the short side, and then you have the options market being played out, setting up the position. And then once that's secured, you can see the order book essentially follow suit, open up, and then let the market kind of find its new equilibrium. And I think on my screen at the moment, if the director could put it up, thank you, This is
unpack this one. I don't think this is one we've seen before. So yeah, definitely need to unpack what we're looking at here.
Yeah, there's a lot going on here, and I think it'll help explain a lot what JJ's really getting at here, which is, being able to purchase call options essentially for a discount at the moment, and being able to kind of look at long dated options and kind of sell a little bit of premium, which you have a bunch of lines on this chart. Each line is an individual expiration date. And if the line trades up, that's implied volatility going up at the money. That's the important term. All of these lines are each individual expiry, and kind of what that IV is trading at the money. So the lines that kind of are grouped at the bottom, those are very short-term expiries. So these are like 1 day, 2 day, 1 week expiration dates. And you can see implied volatility was trending down. And so this is much cheaper, if you will, relative to options that are traded long dated at the top. You kind of have that band. So those are like quarterly, monthly, et cetera, moving on into next year expiries. And so they went ahead and purchased a lot of short-term calls. I think, JJ, you were saying that earlier before we even hopped on the show, and maybe kind of get into that. But once that was filled up, you can already see implied volatility is jumping this morning, and that's them just going ahead, and whoever set this position on is already kind of banking on that.
Yeah. You could see that big spike there. That's basically demand for these contracts that we were highlighting that are expiring next Friday, these 45K calls. So as people start to buy these, that's when you see that large spike on Ben's chart there. Yep. That's right basically here. The demand of those 45K calls or so. Mm-hmm. And you see that on the order book here. Like basically the second they remove these sell walls, that's because all of a sudden they were long. So whoever is making this market on derivative, they had the long position. There was no longer the need to suppress price below the strikes they sold expiring this Friday. And now there's some nice demand popping up here. You see this green line. These are bids. So that's going to push the price up the same way this pushed the price down.
It's strong. It's so mechanical in the way that it's playing out. Like this is a very thoughtful market maker, just going ahead and taking what they can off the table and then letting the market move kind of in the direction that it's really naturally going. Exactly. Yeah.
I want to ask both you guys a question. I'm thinking about the audience here, many of whom are probably experienced in using technical analysis when they're looking at these charts. Maybe less so looking at the combination of taking the technical and the volume, looking at it, how that is related in perps and how it's related in options. Is there any signal, if they were just doing technical analysis of Bitcoin today, that they'd be able to get that would show the same, I would say, footprint or fingerprint, as we sometimes say, related to what you just shared? Because that seems like a deep insight to understanding where the market's going, that you just wouldn't get out of technical analysis.
The odd thing is there's always these like confluence, right? So earlier this week, last week into this week, we saw basically this 50 RSI mark, which is kind of your line in the sand for bull markets. In your typical bull market, price doesn't go below the 50 RSI on the daily chart very often, if at all. So we basically saw a huge run up into early December, and then it faded back to this 50 RSI mark, and that's at the same time we saw the upside buying and this kind of move off the bottom. So here we were at 40.3K. Basically doesn't tag the 50 exactly, but it's close enough, right? And then we see that follow through at the same time. We see that confluence across the board of upside buyers, sellers kind of removing the sell wall and just opening the gates for higher prices here.
So you can do some input. Oh, sorry. Yeah, Ben, go on.
I was going to say, just to add into that, all that was really insightful, and kind of what JJ said, like right before we got on the show this morning, he's like, Ben, did you check out CBD spot this morning? And I said, no, I didn't, and pulled up the chart, and it was just, it's glaring, right? You had this trend playing out since, let's see, over the past couple of days of CBD spot just going sideways, not declining, which you would almost expect if this is a distribution event in the market. But because we had such a nice pop after the sideways movement, it's so hard to ignore. And what, like for myself, like even just yesterday, I'm sitting here looking at, what was it, the average 30-day return on various positions in the market. And it was trending, it was overheated, right? It was almost due for the pullback. I've been expecting a bit of a pullback, but when you see those technicals the way that they are, like it's hard to ignore it. You just have to kind of go with it and not fight it.
Yeah, fair enough.
The tide when it's this strong. Like that's the thing about, everybody wants to call the tops on these parabolic moves, right? But most of the time you're waiting for, like, when you see this acceptance either below the 50, like there'll be indicators across the board. You'll see a lot of put demand. You'll see these sell walls strengthening rather than weakening. Like you have to wait for these signals to play out. And that's the biggest thing, is just kind of seeing what the people who actually have enough capital to move the market are doing, and then following in their footsteps rather than trying to swim against it just because you think price should go down. Like I think we all thought price should go back to 36K, and I think it will, but that doesn't mean it's going to happen before it goes to say 47 or so.
Absolutely. And here's that chart for the 30-day return. Like you can see, like this is just constantly ebbing and flowing and just moving along this 0% line. And as it just kind of hangs out in this positive territory, you're just expecting a bit of a pullback, and we started to get it. So either just sideways and kind of just doldrums in terms of the market, you would almost expect, but you didn't see it. And then CBD spot did what it did, it's hard to ignore. And one of the things driving that, which is always, whenever you see this again, you just kind of have to let it play out and ride this wave. But it's the New York session. it's just completely gone parabolic in terms of the returns being realized during those hours compared to Asian and European sessions. There was an old piece I wrote on just looking at when you see this sort of trend taking place in the market during the New York session, you just let it play out and it lasts for a considerable period of time. Like you just don't fight it again.
Months, quarters, days, weeks, when you say, yeah.
When you see the US session starting to taper off and start kind of going sideways, and then either the European or Asian sessions start to pick up and follow suit, like that can play out a few weeks after the fact. So as soon as kind of this red line on this chart, which is showing percent returns during kind of an 8-hour window, which we just had the New York session open not too long ago. So now this would be those returns that are happening in the next 7.5 hours would show up on this price line, for example, but not on the black and the blue line.
I think a lot of people in TradFi were severely under allocated below 40K as well. I think the kind of consensus was that price was going to fail at 36 to 37K. And as we saw price accept above 40K, we kind of see this rush in and demand for and Ben called this out like a month or two ago. Check out Mara, the Bitcoin miner. It's just gone absolutely parabolic. I think Ben was sending out the buy signal in November when we were at like $8. Basically tripled. Not to say rush in here, but you see TradFi is, right? Like there's demand for this risk. There's a lot of liquidity still left in TradFi markets that was just sitting on the sidelines. And now we're kind of seeing this TradFi FOMO, which we saw last we saw it was in 2021, and we're seeing it return now.
Yeah. It's interesting to see all this to play out. As you said, a lot of these calls or when we talk about the market, it can take time to play out. And I think especially in a market where everyone is looking for what happens in the next 5 minutes, it's really impactful to be able to take the time to think about what's going to happen in 2 months. Or it can actually give you a fairly substantial edge. I want to summarize kind of where we're at right now. We got some trading spot volume that seems to be coming in, which is looking bullish. We've got the perps, which are signaling bullish. We've got options, which suggest that so people are kind of hedging their bets. Right now, it looks like the bulls are in charge, and it looks like we could be seeing some more price movement north. So I guess, JJ, I want to come back to you. Explain, what do you expect? Last week we talked about, consolidation going into this Friday, then potentially some fireworks the last week with TradFi being kind of out on holiday and the rest of the market still going. Is your view still that, or has it changed at all for where you expect price to go? Like the most likely outcome, 90% outcome, what do you expect over the next week or two?
So we've seen a lot of positive developments in the ETF announcement, right? We kind of see that telegraph for January. And my thinking all along is that if that is going to happen, and it's as certain as the market's been telling us, as it seems it is, we're going to see that front run. And that's going to bring us to new highs, probably around 47K at the low range or 52K. And I think that'll come before January because the market's the information gets priced in early, right? People.
Okay, so just to clarify, when you say new high, not an all-time high for Bitcoin, but a new high for the year
for 2023.
Yep.
Right.
Okay.
So I think we're seeing that priced in now. Is that the ETF's almost 100% certainty, and we kind of see this rush for demand now. All of a sudden, that TradFi is aware that it's 100% certainty. I think it's been 100% certainty since BlackRock filed, but that's your edge, right? Is the time it takes for the market to digest that information is where you can make the bulk of your money. So that said, I wouldn't be chasing here. There's a lot of risk still baked in, and you're basically playing for an 8K move at the most to the upside. Like it's a 3 to 8K move where we would top out, I think, 47 to 52K. But I think that juice is still there. So if you're long, probably stay long. But as I said, there's some nuance to unpack today as well. So if you want to get into now that we've painted the full bull picture, we could kind of get into the bear case as well, because there are some things to be aware of.
Yeah, I would love to hear more on that bear side. I guess on the bull side, just to wrap that up, when you think the upside, we talked about people trying to call tops, which I don't think we really suggest, right? We're kind of constantly doing an update to our market expectations based on what we're seeing in the market. Why do you think 52K kind of looks like a local high? What exactly is signaling that for you?
I think the options market is a big tell of this. So if we look at all expirations, we see there's a ton of call volume here at the 50K mark, and this is mostly expiring January through March. So over 22,600 BTC of open interest here. And this is going to kind of work as either a resistance wall, or I think it'll wick past it. People will take profit somewhere in the 48 to 52K range. Like, I don't think people are just going to hold these calls indefinitely forever, exercise them. Price is just going to go straight up forever. We're looking pretty overextended on different timelines here. Like, this is a clean breakout, et cetera, like long consolidation period and then breakout, but things just don't move in a straight line. There's obviously a ton of leverage built up below. There will be even more so if we get up to 48 to 52K. Like, that's when you really see the retail FOMO. Perp markets will become overheated, and I think we'll be due for a liquidation run back to at least 40K at that point, possibly as low as like 32 to 36K. But that's just how the market moves. Like, it makes it wants to paint the picture that the market's going to move up forever to create that FOMO and demand. So if we would go back to these whale wallets that we've been pointing out for the past few weeks here, let me show the year chart. So you see how much accumulation there's been taking place throughout the year, like below 30K, and then all this way up as well. They've been accumulating all this week. So at some point, these people are going to need exit liquidity. And I would imagine that will come if retail starts to FOMO. If we get a break into new highs like that 47K and above region, you really see people expecting like 100K targets and whatnot, but we know markets don't move that way. That'll probably be a logical spot for a breather if we continue from here.
All right, Ben, what are you looking at? How do you see this playing out over the next couple of weeks? Are you in agreement with JJ, or do you see something else?
I see genius level engineering unfolding right now in the market, because it's incredible what is taking place. Like, I just constantly, like almost daily now, just hats off to whatever operator is doing this, because they're doing a stellar job. And if you think about trying to engineer liquidity on a news event and kind of driving this desire, like, I am really going to miss this ship. Like, I need to get in. Like, just think of how much of like that desire, like, I need to be a part of this. Like, how do you generate that? Like, this entity is doing this. And if it gets to the ETF, you see this price action taking place, like, that's going to be the desire that everybody has. They don't want to miss the boat. And as far as like the market right now, you have inscriptions. So this is kind of like a little bit of tangent in terms of altcoins and other layer ones. You have these narratives of inscriptions taking place and network congestion. Like, that's kind of running out of steam, just because of just the throughput of a lot of these systems just doesn't allow for all these individuals to go to these far ends of the ecosystem. Like, you want to look at this as risk curve. We're fully out there. And what tends to happen is once everyone's fully out there, we now need to come back. Right. And this is almost like setting up to be that blow off top, that last kind of Bitcoin liquidity milkshake moment where it just tears the market wide open. And then it just is going to present a ton of opportunity too. Like, if that does take place.
Okay. Now I'm just thinking about the engineer sitting in the back shop engineering all this massive amount of liquidity. So, okay, just to pin you down a little bit, JJ just talked about a kind of a local area based on the options around the 52K mark being maybe a local top as we head into 2024. And then looking for some kind of consolidation, maybe down 40K, maybe below that. Let's say that plays out. What do you expect to happen for the rest of the market? Because we're just talking Bitcoin there.
For the rest of the market, where is all that liquidity going to go? Where's the next kind of market cap that can facilitate all of that activity and all of that action? That you just kind of go one step down from Bitcoin to Ethereum. And I know it's being completely destroyed right now. It's like crypto Twitter has put it 5 feet under. It's just 1 foot away from being called dead. Like, we are getting that close to the point where this is very reminiscent of what Solana was. We were saying when we went ahead and did a beta play recording that Solana is just due for a correction just because it's been hated for so long. And it can bounce back regardless of its fundamentals. That's just what price tends to do. And when it comes to Ethereum, it's sitting there in the same boat at the moment. And we like the divergence chart. I just pulled that up here for Ethereum to show that, for most of the last, 6 months, like, we have not seen whales touch it. Like this is all this green color, this purple color, this is all whale down in terms of whales either selling it or just not accumulating it. And then we're just starting to see interest start tracking up. So this is almost in preparation for what could eventually be the ETH trade that's going to show up in the market with vengeance, if you will.
Now that ETH trade, I want to get into what those trades are. So what I'm hearing is it sounds like you guys are kind of in line in terms of what your expectations are for the market over the next couple of weeks, right?
I from what JJ has said, I mean, a lot of this is just he's almost crystallizing some of my thoughts. So it's if anything, I'm just piggybacking JJ at the moment.
Well, that's the smart thing to do. Find the smartest thinking in the room and follow it until it isn't, right?
I wouldn't say that. I'm just a janitor on the internet.
Oh, no, I wasn't saying you're thinking. I mean, the thoughts themselves. Okay, JJ, I don't want your head to get too big.
I mean, it's just there. If you spend enough time just staring at these charts and whatnot, like you see the patterns over and over and they tend to replay themselves. I think it's just more, most people don't have the time to stare at their computer screen all day. I'm not a genius.
I mean, the one thing that's really hard to figure out is I think we've been discussing this for most of the week is kind of what's the Dixie going to do? What's the DXY? Like it is poised to be this absolute monster in the room in terms of what it's going to whatever it decides to do is going to dictate like global assets across the board. And if this is risk on, like how does the crypto market not participate even though Bitcoin wakes out and starts to trend lower and kind of retest 40K and possibly into 38?
That's the thing. It's like, go ahead, Marconi.
I was going to say, I want to expand on that because we talked a little bit about a bear scenario. I mean, right now you're talking about even more fuel for the fire. I always want to ask about the Dixie. So Ben, thanks for bringing that up. What is the Dixie signaling right now?
It's looking pretty damn ugly. So we have the big PCE number coming out Friday, and that seems to be what Dixie's waiting on. Let's pull up the daily chart. So this is one of the worst looking charts I've seen in a while here. You see, it's just been breaking down basically since October. Like we had that huge run up. Like there was a lot of people that were short the dollar here in July. And then we had this resurgent as inflation data came back in hotter. And then it came back in lower again. Like you just see this kind of pendulum effect where it got oversold, overshorted, rose back up, squeezed everybody out. Like this was when Bitcoin was at like 24K or so. And it looked like it could break lower, right? Because the Dixie just seemed like it wanted to run up to 110 plus. And all of a sudden we saw it kind of bounce, consolidate, or drop down, consolidate, and now it's just falling off a cliff. We see these federal funds futures keep rising up, which indicates lower rates in 2024. So everything's kind of lining up for the Dixie to drop lower. I think it's just waiting for that final catalyst Friday, which would be a cooler than expected PCE print. So if that comes in lower, I think we'll see the Dixie breakdown. That's really when you'll see that Bitcoin FOMO come in, right? Like all of a sudden the dollar's firmly, like maybe it drops down to the yearly lows below 100, or it starts trending in that direction. That'll really provide the catalyst that Bitcoin needs to break above 47K, is if we see the Dixie, like you see it hanging onto this range here on the daily, looks extremely ugly. Then you zoom out, you go to the monthly chart, it kind of looks even worse. So look, it's just barely holding on to this range. Not to say it can't bounce from here, like say PC comes in hotter than expected. We're back to square one. Bitcoin's at probably 36K if this bounces to 104 or so. So there really is a lot hinging on this Friday. So that's why I'm saying, like, if you're not long, like if you've been long this whole way up, you can let some ride for that additional upside. But if you're not long, just prepare for that FOMO run that's going to take us up towards 50K, but don't give into it. Wait for that drawdown eventually, because this is going to be blinding. Like this drops back down to below 100. It's going to be severe FOMO in the market, but I don't think that's the time you want to be entering.
Well, I want to ask that question because if we see that wick down or the dollar just continues to break down below that 100 mark, that is when we see a tremendous amount of rocket fuel for risk on. What if Bitcoin hasn't and the market hasn't consolidated at that point? We haven't seen a wick down. Is it possible that doesn't happen? That we get caught off sides?
I think it's possibly something like this, right? So this early 2020 pattern where the Dixie broke down and then it shot back up. So I think that's kind of setting up for this slingshot effect in quarter one, where it would have this fake breakdown And then we would see a strong surge back at some point, say before March. So that's why even if the dollar breaks down and Bitcoin breaks up, I wouldn't want to be FOMOing above 50K. I would wait for this dollar resurgence to kind of start placing bets and see what the market looks like at this point, because it's not going to go down in a straight line. Like, yes, it's looking very ugly for 2024, especially if we zoom out to the monthly chart, which is its all-time chart. Like, look at this. If it loses the 50 RSI mark, Ben pointed this out in an essay this week, lost the 50 RSI mark in April of 2020. We know what happened next. Bitcoin ran up, lost it in 2017. April 2017, Bitcoin was around like 3K. Then obviously it ran up to 20K. So it's setting up for a huge 2020. But you don't want to jump on that trend, or like there's going to be bounce backs. So you want to wait for this. If it does break down on Friday, you want to wait for that first bounce back that comes in Q1 that sends it back above 100, and then see what the market looks like then and begin placing your bets. Like, this is just fuel for that blow off top that we were discussing to 50K and above in the short term. But then there'll be consolidation, at least I would say back towards the low end of the 40s, possibly as low as like the low 30s in Q1.
Okay. All right. So I think there you have it. I mean, everything is setting up for some bullish indicators for the next couple of weeks. So then I want to go in, unless you guys have some explicit bearish information. Ben, are you going to come in? Are you going to bring the bear?
I don't know. We'll see where this goes, but it was more of a kind of the underlying fundamentals of JJ's DXY chart right there. Like, you can see the local top. Looks like it was early November, end of October, I think, right there in 2023. You know, what drove that move in the dollar? I don't see a lot of discussions happening about this in crypto Twitter and kind of larger talking areas. Is just what happened on November 1st. The U.S. Treasury went ahead, and I pulled up a table here. They changed the way that they're going to distribute debt. If we think about dollars and why the dollar had such strength, is because it had such great yields, and those yields were going to keep rising. And so it was just pristine asset to have to go ahead and generate income. But then the U.S. Treasury said, wait, these 30 years are moving too fast. We can't issue that much debt. We're going to go ahead and change our plan. So they went ahead and said that, okay, in January, we're going to issue less. Okay, so that means people can't eat up this amazing yield that's taken place for the next 30 years, especially when historically for the last decade or two, rates have been near zero. Like, this is a great asset to hold in any portfolio. But what was almost, I find funny, is what happened in the comments after that. And they actually wrote it out that there was substantial volatility in the market. You shouldn't hear the U.S. Treasury say there's too much volatility. And so if you go ahead, and this is straight for the 30-year. They're not talking about the shorter term treasuries. It's the 30-year. And if you go ahead, and if the director pulls up my chart, this might be an entertaining headline, is who is the biggest holder of 30-year treasuries? I mean, it's the Fed. They're the biggest loser right now on 30-year bonds. They're down like 50, 55%. And I know this doesn't really matter because it's the Fed. They're not going to go insolvent, right? But it's almost like Yellen got a tap on her shoulder from Jay Powell saying, hey, we need to slow it down a little bit. This is too much. Okay, so now you have less demand on dollars, and that's helping drive this. So when we go ahead and we look at what's going to be happening next year, rates are coming down. And so that pristine yield is going to be coming down along with it. And so this is just, it's setting up for a really good scenario for a post-halving environment.
If you look at 2022, 2023, it was always going to be unsustainable. The way they jacked the rates up so quickly. And you saw it on the Dixie, how high it went up to 115 or so in 2022. And we saw the gilt market break. We saw Silicon Valley Bank's crisis, right? And then in October of this year, we saw the crisis in US yields even. So like all of these fractures were showing in the system. And it was only a matter of time before they devalue it, because they literally have to. Like, you can't have the dollar break the US Treasury and the Fed's balance sheet permanently. Like it was never going to be sustainable, but the market is so good at convincing you that it will be, right? Like the same way in 2020 and 2021, people were convinced rates would never rise again. Same way last year, people were convinced that rates would never drop again. It's just always going to be these ebbs and flows. It's kind of the nature of the system here.
Yeah, and how it's been structured over time. So, okay, there's some really good episodes for all the listeners out there. Maybe you're new here, or maybe you're a longtime listener. You haven't necessarily heard everything that we've talked about, but I think it was several episodes back we talked about changes in accounting that may be coming that would impact liquidity in the market. We've talked several times about the fact that, as JJ pointed out, you're going to need to change the government funding model. Is not set up for rates to be this high as they already have this much debt. So a lot of these things have been telegraphed for a very long time. If you're listening to these episodes, you're going to hear that. I did want to point out one last thing before we start talking about some trades. If you're new to options trading and you have questions about a lot of the terminology here, it can seem a little confusing. JJ has actually started to put together a really great options training course, and he's going to be putting out more episodes on there. You can check that out on the channel where he breaks down the concepts in really easy to understand ways and shows you how you can start to use those concepts to think about your trading strategies for options, specifically in the crypto markets. But I just want to put that out there for everybody who's maybe new to options and hears these terms and has questions. So
it's going to be fun. I just recorded it yesterday, so we're starting to put that into production. It's going to be really good. Definitely take a listen.
Yeah, I'm very
that's
excited.
Something else worth pulling up here too, if you want to just expand on that a little bit, is this BVOL chart. So this is something we'll talk about through the course of that series of different points, but look how beaten down this is historically. Like if you look at Bitcoin's historical volatility, this is kind of measure of the average daily trading range over the course of, say, 30 days or so. So typically it's in like this 50 to 100 range. And since the collapse of BlockFi and whatnot in August 2022, it's just been compressed. Like Bitcoin's moved a lot. We've seen this move where it over doubled in 2023, but it's been a very low volatility move. Like we saw these spikes and then the slow grind up. And that's a pattern that's similar to 2020. So we saw obviously a lot of volatility. This is the COVID here. This is the COVID crash. And then we saw volatility drop down. Bitcoin's price was moving up throughout 2020, but volatility didn't kick in until November of 2020. So this is when we broke above 14K, and then you see it go nuts here, all the way above 130. So we're still waiting for that high volatility move, and that could possibly be the break above 50K, or this could come later in 2024. But I think eventually we're going to enter a high volatility Bitcoin market again. Dude, that's its natural state, right? Like this is not Bitcoin's natural state to be trading sub 30 BVOL for over a year and a half. It's only a matter of time before we see extreme volatility come in. And I think the options market is very unprepared for that. So that's one of the many things we'll be discussing in that series. Be sure to subscribe so you watch it. Yeah.
No, that's fantastic. Okay, well let's transition now, because we've painted the picture for what we think is happening in the market. I want to know and we've talked about where we think it's going. The question now is, what is the trade, if any? Ben, I want to start with you this time. Are there trades that you're looking at? And just to recap some of the ones we've talked about on the show, we've talked about the ETHE trade. Last week, I think JJ called that free money and gave a setup there that someone could look at. Then we've talked about specific tokens, and I won't even go into that entire list. I think Ray, a couple episodes, gave out a full list. You can, for those who are curious, I think he actually noted what all of them were. And then last episode, Benjamin actually walked through more of a screening approach. And I think his was a little bit more longer term. I think he was cautioning people to getting too much into this before the halving. So from your perspective, are you looking at trades over the next couple of weeks? Are you thinking more on a long-term basis? How are you looking at this right now?
Yeah, I tend to be more long-term basis. I'm kind of a snail in the market. Even when I do trade, it tends to happen over weeks, not just kind of in the moment. We do have systems for that just autonomously trade the market, so I don't have to worry so much from hour to hour. It's just more of developing longer term thesis and changing kind of collateral requirements and then letting systems trade off of it. But as far as, the market itself, what I'm kind of looking at is Ethereum DeFi at the moment. It's another hated asset class. But I mean, the amount of individuals that have interest in those tokens, the amount of market makers that still have holdings on those tokens, and almost the interest for exchanges to see that trade volume pick back up again in 2024. That's in the back of my mind, but in the forefront, I'm waiting to see kind of Bitcoin make its move and then see confirmation that ETH BTC wants to actually go ahead and try to show itself. If that happens, and it's no guarantee, right? Nothing is markets guaranteed. So you always need to have plan B and look at other opportunities to see if those trends start to accelerate, that you're not afraid to jump in, because it's moving so fast that you don't have time when it starts to happen and your thesis is wrong to go ahead and develop another one over the next 3-4 days. Like, it's not going to work that way. You need to be prepared ahead of time. But if we get confirmation that ETH BTC trade is going to happen in Q1 or on the heels of the Bitcoin ETF approval, Ethereum DeFi is kind of where I'm looking at, because those things have just been hated and depressed for so long. And I know there's a lot of just stagnant, stale supply out there, but a lot of these projects have been innovating and going from various chains, and it just takes a flip of the switch. Like Synthetix, I think, changed their economics recently. I would expect a lot to follow suit here in Q1.
So I just want to clarify, make sure I understand what you're saying there. So if the ETH BTC chart kind of breaks, we've been talking about that for a while, sort of looking for the ETH BTC chart to break down. If that break down, then you're sort of looking at the DeFi market as a place to rebound. Am I understanding that correctly?
That's correct. And especially for the projects that went ahead, have been building into L2 environments, like those are the projects that have strong narratives. They're going to take advantage of any sort of zero knowledge narratives that might surface, as well as, cross-chain interoperability, or, the strong decentralization and security of Ethereum's L1 and being able to put liquidity on there. It's just that right there, I think, is going to lend itself really nicely from ETH to ETH DeFi plays, and then probably branch off from there, if that happens. Because we saw a lot of L1s really fly here, and a lot of their DeFi projects fly as well, which means it's kind of, the market is tipping its cap that if the L1 starts to run hot, then you can go ahead and start looking at the smaller plays that exist there.
Okay. Interesting play. And I think you gave us one example with Synthetix. I imagine there's other ones that you're evaluating and you're asking yourself, what have they done from an economic model perspective? Have they been stagnant but still growing? So something to consider, I guess, for all the audience out there. JJ, I want to come back to you. You look like the Joker. I know you can't help it, but I have to call it out, buddy.
Yeah, my avatar's frozen. Sorry.
Yeah, well,
I've been trying to fix it. It's just not changing. So
well, I think you're just too excited. You're not going to change until the bear market comes in, right?
That's how excited he is right there. His computer froze on him.
Freaking out, waiting for 50K.
That's right. So tell me, last week it was about the ETH trade. You gave a setup there. Are you still looking at that? Is there something else that's kind of caught your attention as the market started to progress?
This trade continues to be free money. So I'll just reiterate that again. If you are someone on the sidelines and you have no exposure at present and you're kind of FOMOing, just simply buy the ETHE and short the futures against it if you want to hedge yourself. And this is going to print in 2024. I'm almost positive. Like, as the Bitcoin ETF gets approved, we kind of covered this. It becomes inevitable that the ETH ETFs are going to get approved as well, due to the legal kind of precedent that was set where you can't approve the Bitcoin futures ETF, but not approve the spot ETF. We already have ETH futures ETF, so obviously spot ETF is going to follow. The timeline for that, who knows? But as Bitcoin starts to get approved, if it gets approved, you'll start to see this front run. And I think this will catch back up to par with ETH, and you'll catch the nice premium in between that, the gap that it's currently trading at a discount. I think it's still around 20 to 25% or so. So that's literally free money that you can just pick up if you're sidelined and FOMOing. In the meantime, like, there's no trades that are jumping out to me at the moment. What I'm really waiting for is either that wick up, and I think there, like, if we get that move above 50, I think volatility will become so overvalued in the near term that you could sell some like call spreads and different strategies like that to capture the volatility when it's overextended. But I don't see anything right now. I'm just waiting for that to play itself out. And like we're saying, just let the market come to you. Like, the way I was a bit probably over deployed on this move up. So I even early. So like I tried to get in early October when I thought Dixie was due for a pullback, and I was a little bit early, but it ended up paying off. So I'm kind of actually looking to deleverage those positions into the end of the year. So the way I'm going to play it is completely different than someone who's been sidelined, right?
Right.
But I think that ETHE play will continue to be free money for all the reasons Ben pointed out. Like the sentiment on ETH is so beaten down and so bad. People are all in allocated to different L1s, Solana, et cetera. I don't think that's going to continue because they don't have the same ETF catalyst coming up in 2024 that ETH does. And you add in all the different fundamental reasons that ETH brings to the table. I think it's overdue for a rip that not only outpaces Bitcoin, but the broader market in general. And I think ETHE is a great way to play that.
Okay. So free money with ETHE. Probably looking at, if you're sidelined and you have some cash and you want to deploy it, that sounds like the trade. Otherwise, I do want to bring it to everyone's attention. I think you guys are cautioning that while we may see some upside, definitely some volatility coming in, it's not a good time to be FOMOing, and looking for a pullback is probably a better position to get an entry into. So right now it's about riding the waves that you're already in, other than the trade that JJ just mentioned. Absolutely. All right, gentlemen. This is the last live show of the year. We're going to be taking a little bit of time off, which may be a mistake. I don't know. If the Grinch comes next week and tries to take everyone's presents from the trading Christmas tree, we may have wished we were back here, but we're going to be off. We do have some more content coming. So for those who are out there, if you want more of what we're offering here at Exchanging Good, make sure you like and subscribe. And definitely hit all the like buttons to every single video you've ever watched, and just go back and rewatch them because they're that good. I'm actually going through and re-listening to them right now thinking, my gosh, I can't believe we let out this much alpha for free in 2023. Absolutely insane. JJ,
Shout
Ben,
out early subscribers. Thanks to everyone who's been following along.
That's right. Well, guys, I want to ask you, anything, any last words before we wrap up this show?
Good luck. Have fun. Enjoy the end of the year.
Yeah, don't forget to have fun. There was a lot of fun opportunities to be had over the last few weeks, and don't stop experimenting and testing out new stuff. It's fun. The space can be fun if you let it. So enjoy. And by the way, I'm starting to see cats pop up on my timeline, so that might be something to make note of for the rest of the year.
And please just don't blow yourself up in Q1 of 2024. There's going to be so much good ahead. But it's going to be kind of scary, I think, in Q1. Just don't over allocate yourself now. The big move is coming. It's just not going to be immediate. So have that longer time frame perspective. Yep.
I love it. All right. Well, with that, we're going to wrap up this show. We're going to wrap up our live show for the year. JJ, Ben Lilly, as they put out in the comments, you guys are absolute legends. Love having you guys on the show. Love all the alpha you're sharing. For those out there, heed the warnings, be safe, be good, enjoy the holiday season with friends and family and some smiles, and we will be sure to see you in 2024. This is Marconi White signing off.